So now without further delay, let's begin today's event. Sponsored by Hexaware and hosted by Accounting Today. It's my pleasure to introduce your moderator for today, and that is Ronica Aerosmith. Ronica, you have the floor.
Thank you so much, Greg, and welcome everybody to today's web session, once again titled Trust Disrupted, the Role of Technology in the Trust Cycle in Professional Services. We have two speakers today. Before I introduce them, I'm Ronica Aerosmith. I'm the technology editor for Accounting Today. I'll be just guiding the presentation throughout, and I'll be reading out the poll questions to you. But more importantly, our speakers for today. First up, we have Arun Ramchandran. He's the Executive Vice President and Global Head of High Tech and Professional Services at Hexaware Technologies. He's a strategy expert and thought leader in the field of trust technology and transformation, and he has successfully led business units, teams, and turnarounds in multiple industry situations and organizational contexts. Our second speaker is Swapnil Sule. He's the Assistant Vice President and Practice Lead of the High Tech and Professional Services at Hexaware Technologies. He is a proven expert in executing multiple IT transformation programs, where he has successfully led units and teams to execute transformations to achieve specific business objectives. So we're very happy to have both of them here today. Before we start the presentation, I do have to go over some CPE requirements. If you're here to gain your CPE credit, you must follow the following instructions. So first of all, to receive credit, you must be in attendance for a minimum of 50 minutes. That's 50 minutes. No credit will be awarded from watching the replay. Accounting Today is not responsible for late arrivals or connections issues. Secondly, there will be required polling questions that will be asked periodically throughout the session, and you must answer every polling question in order to get your CPE. So pay attention when the poll question comes up, just make sure to answer them, and you will get your CPE if you do those steps. Thirdly, if you have completed the above, please allow up to 3 business days from today to receive an email from simplecert.net. This email will contain instructions on how you can download and print your CPE certificate. To make sure you get that email, please add simplecert.net to your safe sender list. Please note, only if you follow these 3 instructions, only then will you get your CPE credits, so make sure you do those things. And as Greg mentioned, there is a Q&A panel. You can put your questions in there, technical or content related, and we will get to the content related questions at the end of the session. So without further ado, I will hand it over to Arun to kick off the presentation. Arun, the floor is yours.
Thanks, Ronica. Thanks, Greg. Thanks for the lovely introductions, and to Accounting Today team for being our co-hosts and organizers for today's webinar hosted by Hexaware. The trust-based professional services industry that you are all part of is undergoing a fundamental transformation with changes in client expectations, shifting economics, and disruption caused by emerging technologies. A major part of this professional services market is focused on tax, audit, and accounting segments. These have been pretty insulated so far and dominated by Big Four firms. That's changing, and changing fast. Technology is altering the whole aspect of trust, which is sort of an inherent value proposition, not just for these Big Four firms, but for all of you who are working on these particular functions. Swapnil and I are delighted to be anchoring this webinar. Appreciate you taking the time, showing the interest to join us over the next 55 odd minutes as we learn about the concept of the trust cycle in this industry. We will talk about the elements of the trust cycle. We will talk about the role of emerging technologies that are disrupting this trust cycle. And after we explain that, we will actually walk you through some real-life examples.
Arun, are you ready for the first polling question?
Yes. Before we go there, there's a first polling question.
Okay, perfect. Thank you, Arun. So to the audience, this is our first polling question. Which of the following best describes the firm that you currently work for? The options are advisory, audit, consulting, accounting, tax, or other. So while you look through your options, I just want to mention, because these polling questions are necessary to get your CTE, I'll leave them up for a few seconds. I'll give you plenty of time to answer. In order to answer, you just click the radial button that's to the left of your option or your selection, and then you scroll down, you'll see a submit button on the bottom. Click the submit button, and that will count your answer. So, and I also want to mention, if you've been to any of our web sessions before, we actually have a lot of poll questions during this session. It's more than 3, so just be prepared for that. Once again, which of the following best describes the firm that you currently work for? You have advisory, audit, consulting, accounting, tax, or other. And I know that a lot of firms will mix some of these services. Just choose one that best describes what you mainly do, or perhaps your role, or however you want to do that, and then click submit. Okay, hopefully everyone's had a chance to consider the answers. I'm going to go ahead and count down from 5, and then I will close the poll. So 5, 4, 3, 2, 1. Okay, thank you, everyone. Looks like, yes, a lot of people chose the other option, which might mean a mix of services or something else completely, and it basically descends from there. So tax seems to be where the next most number of people are focusing, with over 20%. Accounting is around 13%, consulting, audit, and advisory descending from them. So Arun, hopefully that helps you position what you're going to speak about. So the floor is back to you.
Yeah, I think it is well aligned, and we have actually examples and use cases for some of these functional areas. But thank you for sharing this information. Let me then move on to the next slide. So some of you will recall that this is actually our second webinar in a series of 3 that we announced at the start of the year. So it's like a trilogy. And this series was to explore the aspects of interdependencies, the various changing dynamics within the whole aspect, the triad of trust, technology, and professional services. The first webinar was back in the spring timeframe of this year. It was about this particular triangle that you see up out here. The second webinar is today, which is around the role of technology in the trust cycle. We had introduced it briefly in March. And the third webinar, which is coming up in winter, will be around getting into trust deficits and reinforcements in the trust cycle as these play out in the context of disruptive and emerging technologies. The recordings of these, especially the first one, are already available on our website, and you can download them. Obviously, the second one is going on right now. And our next polling question is actually on the first webinar. So, Ranika, if you can just go to the next one on the polling question.
Yes,
please.
of course. Thank you, Arun. Okay, so this is just going to give us a sense of where our audience is at. Did you attend the last webinar on the Trust series, the tax, audit, and accounting industry in the era of emerging technologies? Yes, maybe, or no. So I'll leave this up for a few seconds. That'll give Arun and Swapnil a sense of where the footing of the audience is. Did you attend the last webinar on the Trust series, the tax, audit, and accounting industry in the era of emerging technologies? Yes, maybe, you cannot remember, which is fine, or no. Okay, just click the radio button and click the submit button. We'll be sure to count your answer. I'm going to go ahead and count down from 5, and then I'll close the poll. 5, 4, 3, 2, 1. Thank you, everybody. It looks like around 20% of people did attend the last webinar. Most did not, so that'll give you a sense, Arun. So back to you.
All right, so at least 20% seems to have attended, which is great. Thank you, because it provides a lot of continuity. Some of you maybe can't remember, so approximately 40% are somehow in the know. And no worries about the know. We will bring you up to speed as much as we can. The focus of this one will be on one of the concepts, which is on the trust cycle. We had actually introduced this as part of our previous webinar. But just to step back a little bit, right, and provide the context, especially for those who haven't attended or may not recall, the professional services industry, the way we view it, it encompasses firms that provide tax, audit, accounting, advice, legal, research, information services, all such services to organizations, corporations, and even to individuals worldwide. Traditionally, the basis of trust in this industry has been institutional in nature, right? With majority of the business being led by the big four firms that over the last decade, century, whatever, have delivered this trust with their brand reputation of integrity, security, the global reach that they have, the domain knowledge that they carry, the institutional knowledge, and so on. And as we see, technology is playing a much bigger role in delivering each of these factors, whether it's the security, the reach, the knowledge, which have established trust. But it all still depends on the skills and knowledge of individuals. So whether it's the big four firms, whether it's the smaller firms, whether it's individual advisories, like a lot of you may be, it is around people. And while technology is disrupting the delivery of these professional services and changing the meaning of trust, I think the core aspect of people being the biggest assets is not going away, right? So the aspect of people working together, leveraging the knowledge that they have, collaborating with one another, working as a team, exchanging ideas, sharing that intelligence, making best use of whatever knowledge has been captured, making sure that the right people are working on the right projects, making sure that it's being used effectively. All these makes professional services a trust-based industry based on people, right? People operate on trust. People are the biggest assets of professional services companies, and that makes trust the most important asset of them all. Of course, with the recent changes in technology, a lot of parts of professional services business are getting digitized, right? And that also includes aspects related to people. So how do you now, in this new era, how do you make sure that this digitization which is happening, the impact of technology on trust and on people, where people are actually the biggest assets, and how do you manage that in this new era is a question that we'll be answering as part of the trust cycle discussion. So now, sort of introducing the trust cycle itself. So something that we briefly mentioned, right, in our last webinar, conceptually, the trust cycle is very similar to what would be termed as a value chain in some other industries, like, let's say, manufacturing or retail, right? I think a lot of you are familiar with the whole concept of value chain. One part of starts from one end, right, procurement down to delivery and after sales. Similar. I believe that the trust cycle actually applies better, more suited to professional services, which is a trust-based industry by itself. It depends on getting the right inputs, starting from that as the first element, where you pick up the data, get the right inputs, go through a whole analysis process of working on that data that you have received, the information that you have received, take some decisions based on the analysis, based on the report, based on some judgment and algorithm, and then take some action based on that, right? It could be an action which could be internal to the firm. It could be an action which is external facing, maybe with the government, with the regulators. So there are a bunch of stakeholders which are part of this. And all this is actually part of what we call as a trust cycle. And there are aspects of this which will increase the trust in the process or which will take away from the trust. There could be an aspect regarding integrity and security. Obviously, the whole core of this is around collaboration and making sure that the people are being used in the right manner, technology is being used in the right manner, and so on. And you can actually see use cases of this trust cycle. We will explain each of these elements in detail, and we'll walk you through some of those specific trust cycle elements. So when we go through this, we'll also talk about how the trust cycle elements operate together, right? So we'll talk about the trust cycle elements and the ecosystem that they operate in, and then obviously take you through the specific examples in tax and audit and so on. So let's just start with the first one, which is around inputs, okay? And This particular aspect of the trust cycle is focused on data, getting the data from the right sources, making sure that it's the right kind of data, making sure it is coming from the right set of sources, the relevant data points are being covered, and how the data is being inputted. All that is covered under this element. And you'll see 4 aspects to it, and we are going to do this for every trust cycle element. There is a process element to it, which is around how the data is being retrieved, where it is being retrieved, the process to be followed for that. There is a technology element, which is particular interest to us, which is around the data ingestion tools, some of the automation which is possible or which is happening around it. There are tools and platforms around document intelligence, around OCR. Obviously, bigger the data capture is, it could lead to situations around big data. It could lead to things like collecting it from sensors or IoT and so on. There are different things to be considered, whether it's structured data, unstructured data, where are these sources, are there any privacy-related issues, security-related issues. Obviously, if there is some element of data which needs to be authenticated, has it been manipulated, is it true data, authentic data, and so on. So there are multiple aspects around data integrity, reliability, collection of data from different sources, coverage, and I think you all have been through this. Anytime you go through an audit or a tax or an advisory, the first step really is collecting the data, and that comes under the input section here. So that's the first element. The second element is around analysis, right? So once you have this data, this information, you really need to do something about it, because ultimately your output will be based on what goes through this analysis phase. So there is a process part to it, right? And the process part is around how the analysis is being done. What kind of interpretation are you applying to it? What kind of model are you? What is the time aspect of it? Whether you are doing it real time, whether you are doing it post facto. Are you gleaning some insights? Are you applying any human judgments? And then there is a whole aspect of technology, right? Is it something which is being done based on spreadsheets? Is it being done based on certain learning, algorithmic learning, machine learning maybe? Are you doing it as soon as the data comes? Or are you waiting for a certain batch of data to come in before you do the analysis? How quickly and how soon is the output required? How dependable is the model? Are you doing any forecasting? Are you doing any predictive analysis? How subjective is this analytical tool or framework that you're working on, right? So all those also become elements to be considered, whether it is the kind of input, whether it's the kind of algorithm, the logic, the formula that you use. What are some of those boundary conditions? Is there a pattern recognition? Is there a human element involved, right? And then obviously you have to be careful whether you are considering the right kind of tools, the data for that particular problem statement. Is it in the right scale? Does it need to be fine-tuned? And so on, right? So that's the next element. The third is one of the most critical when it comes to the professional services industry, which is around decision making. I think ultimately you can get all the data, do all the analysis. Why professional services firms exist is to provide that advice, that decision, that alert to the clients who employ you or who consult with you, or to the government, or to the regulators, third-party vendors, other firms which are part of that industry ecosystem. But this is a very important process or element in the trust cycle. And there is a whole aspect to it, right? There is a certain amount of it can be done from that based on the reports which come out and how they are presented, the visualization aspect of it. A lot of it is also based on human judgment. And if there is a particular decision criteria, if there is a way to provide a level of confidence, right? There is a technology aspect, and that is something, a lot of it is now getting automated in some ways. But still, there could be errors. There could be biases. There could be biases in the model. There could be biases in the decision making. There could be the whole aspect of manipulating the data, making sure that you're looking at the right kind of outputs, right? I think there is already a famous quote that data can be suited to whatever purposes it's needed for. So, you have to be careful how you make these decisions and what tools and technologies are you using, what kind of reporting and visualization. Is it supportive of a hypothesis? Is it contradictory to your hypothesis? Assuming there is a fraud or a potential fraud, do you go back and check whether the right data came in? Do you go back and check whether the analytical models were working properly, tuned properly before you raise the alert? Because taking a decision saying there is a potential fraud in an audit or there is a potential financial misstatement could mean a huge amount of impact and could append a whole series of other aspects. So you have to be careful when you're looking at taking the best decision and the timing of the decision, the communication of the decision, and what goes into coming up with those particular alerts or actions which come out of this, right? So there is a human aspect, there is a judgment aspect, and technology can help you in till a particular period, particular slot, but then you have to take it forward and take some action, which actually brings us to the last and final element of the trust cycle, which is the impact and action. You've taken a decision or you think you're ready to take a decision, you have to maybe go back to the board. Financial result is probably not recognizable because it doesn't comply with certain standards. Or you'll have to report that maybe there is a particular kind of tax liability and which needs to be either squared away or you need to challenge it in a particular jurisdiction or so on based on whatever decision you have come up with. But there is an action. And that action and that impact could be internal or external. So there is a process element to it. There are certain stakeholders that you need to reach out to. And from a technology part of it, there would be aspects like standards, templates, interfaces, or third-party certification. All those elements are part of the impact and action. And there are obviously technology tools, platforms. We talk about the API economy. This is really where it becomes real. When you talk about this, you're talking about API interfaces between, let's say, your firm and a client firm, your firm and the regulator, your firm and the vendors, right? So all these are parts of a technology element related to the impact and action. Obviously, there are aspects around whether technology is a barrier, whether the standard interfaces work the way they work, whether there needs to be some changes, customizations, to actually make sure that this reaches the right set of people, stakeholders, and so what have you. So this is the final element, bringing all of this together. And as you can imagine, if it's a cycle, there has to be a feedback loop. And that feedback loop actually takes into account all these aspects as the trust cycle goes along. The cycle itself matures. There are different trust cycles for different kinds of functions, right? But this doesn't exist in a vacuum, right? It exists stakeholders, both internal and external, right? So as you go through the process of understanding, figuring out mistakes or gaps, correcting them, realizing errors, whether it's in the analysis phase, decision-making phase, relearning, tuning this, I think you have to understand that all these stakeholders, it could be employees, it could be clients, it could be third parties, vendors, it could be regulators, it could be the government bodies involved. All these are part of the cycle. A lot of them are actually providing you the data to begin with. A lot of them are actually helping with the analysis or the terms of algorithm, decision making. They are finalizing the interface, input-output requirements. Maybe a vendor is now providing you the validation of the data that you're actually analyzing, saying, yes, this particular invoice was raised in this particular time frame and was processed in this manner, or that this particular inventory actually existed in this store or in this jurisdiction. So all these things are validation of the data, the analysis that you're doing exists in a particular ecosystem. So this particular feedback loop and the stakeholders pretty critical as part of the trust cycle. And so now let's look at this trust cycle in action, right? So here, when we talk about this entire trust cycle and how it plays out, we have to realize that while the trust cycle has been in existence, right, it's not a new process by itself. The concept of trust cycle is new. We have introduced it, but the way it is operated has been there. There have been inputs, analysis, and so on. So what actually is changing now is the role of technology in the trust cycle and the various elements. And you, as a practitioner or CTOs and CIOs, have to actually reimagine how this trust cycle works. So right from time of data being extracted, recorded, viewed, analyzed, reported, a lot of trends are changing. Now, instead of doing this in a batch mode, post facto, a lot of this needs to be done proactive, real time. And insights need to be gleaned almost instantaneously to be passed on to the right stakeholders, right? So all these steps that we spoke about, they're getting highly technology dependent and disrupted. And there are certain things which are actually speeding up the process. So you talk about automation, right? When you look at AI, ML, machine learning, you look at just pure simple automation, it can actually speed up this process. So right from inputs to analysis to decision to impact, you can make it operate seamlessly. You can make it operate in a straight-through manner. You can make sure that it's more accurate, and that can happen through the automation aspect. And when we say automate everything, in this case, we are talking about the process part, the technology elements, the interfaces. You can actually leverage the power of the cloud to bring in enough computing power based on the kind of data you have. Bring in the algorithmic savviness. Use the tools which exist on public cloud to actually do the kind of analysis that is needed, the visualization, the reporting, and even get the flex that is needed to, depending on business needs. Like, let's say it's a tax filing season. You need more compute power. You need more processing. That can be done using cloud. And finally, in terms of the experience, right, and understand that there are various stakeholders, each have their needs in terms of inputs, outputs, the kind of dashboards they look at, how they enter the data, how they see the reports, and all that can be made much more user-friendly or much more contemporary based on transforming their own user and employee experiences. So I think the point I want to make here before I hand it over for the actual real-life trust cycle examples is that technologies can disrupt, they can complement, they can enable, and this can help change some of the business models itself. And that's really one of the key takeaways that you will see from the next few slides, how the trust cycle by itself and by some of these enabling technologies, we are going to be able to create new business models for, let's say, tax or audit or accounting, the way these services are created, crafted, and delivered. So that brings me to the end of my section. But before I hand it over to Swapnil, we do have, I think, one or two polling questions.
Thank you, Arun. Yes, so we do have another polling question up. This one says, what is your point of view on the trust cycle in the professional services, tax, audit, and accounting industry? So the options are, you completely agree with the views explained on the trust cycle. You agree that such a cycle exists in your industry, but your views on specifics are different. You agree in principle that such a cycle exists, but not always, because it depends on specific engagements. You cannot comment for now, or you do not agree with the trust cycle as it was presented. I'm going to leave this up because it's got some complex options here. You may want to think about your answer a little bit before you select it. And I want to note, as Arun said, we do have another polling question immediately following this that will set up Swapnil. So just stay alert. Once we close this poll, we'll go right to another poll and then to the next section of the web session. So once again, what is your point of view on the trust cycle in the professional services, tax, audit, and accounting industry? Is it that you completely agree with the views explained on the trust cycle? You agree that such a cycle exists in your industry, but your views on specifics are different? You agree in principle that such a cycle exists, but not always, because it depends on specific engagements. or you cannot comment for now for whichever reason, it's fine, or you do not agree with the trust cycle. So to select your answer, just click the radio button to the left and then scroll down. Make sure to click your submit button. In the interest of time, I will close this poll now by counting down from 5. 5, 4, 3, 2, 1. Okay, thank you everybody for your answers. It looks like what I expected is that more of the participants, just under 40%, are saying that they agree in principle that such a cycle exists, but it depends on specific engagement. Sometimes it differs. That's what I would have expected. Some are not able to comment. Around 15. Oh, sorry. Go ahead, Arun. Did you want to say something?
No, sorry. I just wanted to echo what you're saying. I think this is something which we expected. The majority agree in principle or agree that in general such a cycle exists. Views could be different for specific engagements or specific cycles. And as you get more details, obviously you'll figure out a little more specific around your own functional area, like tax or audit. So we'll try to clarify that. But this is something very similar to what we expected. So I think that's great.
Right. That's great. Yeah, and a few people are saying that they completely agree with that trust cycle, etc. There's a minority of people saying they don't agree. If you have a comment on that, please submit it in the Q&A panel. We'd love to read it. It'll be informational for the presenters. Any comments at all would be fine. Okay, so without further ado, I'm going to go on to the next polling question. Okay, which of the following technologies do you think are causing the maximum or key impact on the trust cycle elements? So your options are artificial intelligence or machine learning, automation bots, cloud capabilities, digital platforms, blockchain or distributed ledger, the Internet of Things, also sometimes known as IoT, augmented reality or virtual reality, or all of the above. I'm not going to keep this up for too long because we do have to get to the second half of our presentation. So your options, which of the following technologies do you think are causing the maximum impact on the trust cycle elements? Really quick, it's AI, machine learning, automation bots, cloud capabilities, digital platforms, blockchain, Internet of Things, augmented reality, virtual reality, and all of the above. Some of these things will be embedded in software that you use as well. Okay, so I'll go ahead and count down from 5 to close this poll. Here we go, 5, 4, 3, 2, 1. Thank you, everyone. Looks like all of the above is the most popular answer. About half of attendees are saying that, and then the rest are spread throughout. Cloud is unsurprisingly one of the top ones as well, and AI and machine learning, which is also not surprising, at least to me. Okay, Swapnil, I think you're up next, and the floor is yours.
Yeah, and just one comment here, Ranika, before I hand over to Swapnil. I think we did a survey around 3 months ago with several professionals in the professional services industry, and our findings from that survey, which is also on our website, mirrors very closely to what we are seeing here, being cloud, automation, and artificial learning, artificial intelligence, and machine learning being some of the most widely adopted or being considered as technology enablers.
Yeah, makes sense. Okay, great. So, Swapnil, take it away.
Thanks, Arun and Ranika. Now, we've seen the different elements of the trust cycle, the way Arun has explained. We've also gone through the different technologies that are, disrupting, enabling, optimizing these elements, if you may, right? Clearly, based on, the survey results that came out earlier, a couple of months back, as well as what all of you have voted for now, we can see that artificial intelligence, cloud, and automation are front runners or key enablers. Let us now look at some specifics in the tax, audit, and accounting industry where technology is playing a role. We'll also cover some use cases that we at Hexaware have tried to solve and some differentiating solutions that we've come up with using these technologies. So if I get to tax, right, that's how, the trust cycle appears. One of the most important elements in the tax area is about the forms. It may be the forms that the individuals have to fill up to file their taxes, or it could be forms that corporates or institutions have to fill to complete their taxation. As far as inputs are concerned, OCR-based technologies with built-in intelligence are clearly the front runners. It's not only about these forms to be filled up online, but also being able to read paper-filled scan copies of forms and pick specific fields and then process them through the system. So as far as inputs are concerned, OCR intelligent technologies are clear front runners. When we come to analysis, typically rule-based engines with some machine learning capabilities become important technologies. These rule-based engines validate majority of the fields that are entered on these forms or picked up through these forms. The anomalies or the standouts, fallouts are then handed over to humans to validate manually. ML comes into play when these decisions taken or the validations done by humans are added back to the ML algorithm so that the engine picks it up next time. Cloud capabilities play an important role in this region on two particular aspects. One is, rule engine capabilities that are readily available on cloud platforms today, and they're quite easily configurable. And second is the pure content management itself, to save these forms for reuse for next time. As far as the decisions are concerned, predictive analytics or predictive models for analytics play a significant role. Organizations nowadays are looking for real-time or proactive tax implications on certain transactions that will enable them to make the right decision. Predictive analytics with relevant data sources definitely aid in that decision making. In addition to predictive analytics for real-time or advanced decision making, OCR scanning technologies like your digital signatures, barcodes, QR codes are again, critical technology elements in the decision making process. As far as the impact and action is concerned, the regulatory authorities, the policies that they have laid out, and the changing regulations, these play a critical role. For example, India rolled out GST last year. It was a major change, right? It caused a major impact in the way tax was getting calculated. More and more of these regulators are, however, now adopting electronic submissions or e-filing. The API-based economy that Arun spoke about and API-based frameworks are forming a key technology factor as far as impact and actions or e-filing is concerned. At Hexaware, we have worked on multiple such engagements or use cases for our customers, be it scanning, intelligent OCRs, predictive analytics, or API-based integration with multiple systems. One of the important ones that we would like to point out is, in fact, a recent webinar that we did last week, where we introduced an API-based end-to-end automation service for tax filing called Validation as a Service. You can see a link on your screen right now. If you want to get a copy of the recording, you can click on the link or reach out to marketing at Hexaware and you can get a copy of, collaterals on this topic. Let me now jump to Audit. Audit is all about evidence, right? The whole process revolves around asking the right questions to collect evidence against certain transactions or activities that client organizations have done. As far as inputs are concerned, inputs in audit are based on discovery. Several tools are available for discovery, tools like Validate or Zero that need to quickly find relevant evidences and make sure that the ingestion of these collated data is seamless. And then there is a whole open banking phenomenon, which is primarily based on the, one of the solutions is a blockchain technology backbone-based solution. a classic differentiating technology factor as far as audit is concerned, not just in inputs, but across the whole cycle. As far as analysis is concerned, absolutely. Rule-based engines, again, some specific standards set by regulatory authorities. An important factor as far as analysis is concerned that technology beats down heavily are the sampling principles. If you look at regular or legacy audit practices, auditors would typically pick a sample set of data for auditing or analysis. The results from this data would then be extrapolated across the department or across the organization. With data ingestion mechanisms, large big data stores or data lakes, this whole sampling is now not restricted to a small size. You can almost audit close to 100% of the data through machines or automatically with a fewer number of human auditors. AI and ML again play a very critical role. Algorithms need to learn from human auditors, thereby reducing these anomalies or the fallouts that we spoke about. And, whatever decisions humans take, the algorithm should be able to pick up and make a decision next time. Again, cloud plays an important role here. Arun spoke about cloudification, right? Again, we spoke about data lakes, we spoke about large big data stores. So primarily for storage or analysis or leveraging AI capabilities that are available out of the box today. As far as impact and action is concerned, absolutely, the regulatory authorities play a very critical role. For example, renewed guidelines keep coming up from IFRS for compliance, or it could be GDPR regulation compliance coming up in the EU, right? And then there is an aspect of automation, right? So we spoke about what are the technologies that are impacting, enabling, enhancing each phase, but then if you tie all this together in an end-to-end automation, the whole audit cycle is drastically reduced. We are, in fact, working for one of our customers where we're taking the standard operating procedures in audit step by step and looking at digitizing, automating each of these steps, which is causing a huge impact in the whole audit cycle. There will be an upcoming webinar on this topic. We're calling it Digital Audit Automation. Stay tuned, folks. It's coming up very early next year. Let's now move to accounting. Accounting is primarily about maintaining books, typically managing accounts payable, accounts receivables, and ensuring that the ledgers are always up to date. Given the overlap with banking and financial services, blockchain or hyperledger plays an important technology lever across this entire trust cycle. If I have to break it down, then of course for inputs, it's again OCR technology, playing critical role, capturing data from unstructured documents and updating books accordingly. For analysis and decision making, diagnostic and predictive analytical models are the definite technology levers, producing real-time trend analysis as soon as or even before a small specific transaction is done. While mobility has not really caught on in this space from a corporate or enterprise perspective, the opportunities of mobile adoption for personal accounting or small firm accounting is massive. It's huge, right? And there are multiple accounting solutions available on the mobile today. You take typical time and entry systems or things like Concur or any other product if you take. They are available on the mobile. Provide mobile-based trends analysis directly to view on the mobile. Regulators, financial standards, etc., changing, of course, cause an impact, and platforms, products who offer accounting as a service need to adapt quickly to these. The clear winner in this space, however, is robotic process automation, right? So automating the entire chain in the F&A world, there are several use cases that RPA is able to, solve or improve. We have done several such RPA-based automations, achieving, touchless invoice processing up to as much as 96% with 100% accuracy, resulting in very fast payments. Significant improvements in turnaround time, as much as 90% in some cases. As I said, this is a classic case for back office optimization with automation as a lever rather than, just pure offshoring or labor arbitrage being a lever. So these were, some specific technology examples across tax, audit, and accounting. Let's take a polling question before I move on to the last section of this document. Tanika, you want to go through the poll, please?
Yes, thank you, Swapnil. So our next poll is, what is your firm's overall acceptance of emerging technologies like AI and machine learning, blockchain, cloud computing, and augmented reality? Options: not yet accepted, gaining traction, embedded in the processes already, highly strategic and innovative, or you're not familiar with these technologies, or you're not sure. So we're talking about your firm's acceptance. So what is your firm's overall acceptance of these emerging technologies? Is it not yet accepted? Is it gaining traction? Is it already embedded in your firm's processes and workflows? Is your firm highly strategic and innovative around these emerging technologies? Or are you not familiar with your firm's strategy, or you just don't know? So we do have 10 minutes remaining, so I'm going to close this poll a little early. So please make sure to get your selection in. Again, click that radio button, then click the submit button. I'm going to go ahead and close the poll in 5 seconds. 5, 4, 3, 2, 1. Thank you, everyone. Okay, most or the largest amount of people, over 40% are saying it's gaining traction. 20% is saying not yet accepted. Interesting to note. And then a few people are 12% embedded in processes already, and 5% it's your firm is highly strategic already. Swapnil, back to you.
Thanks, Ranika. Yeah. So not yet accepted. Well, here we are here to help. Gaining traction will help you accelerate. So that's where Hexaware technologies come into play. We will help you with all these technologies. We are specialists in delivering complex solutions. We have made solid investments in actually creating center of excellences for each of these technologies, be it APIs, AI, or blockchain. We, in fact, run a bottom-up innovation program. In spite of we being a mid-sized organization as far as other big IT firms are concerned, we are punching way above our weight. The industry kind of terms us as a digital David. In addition to that, we actually have a focused unit or vertical, if you may, for professional services. Our world of professional services typically spans across the 5 different segments of this industry that you see: tax, audit, and accounting, advisory and consulting, legal risk and compliance, people and talent management, high-tech platforms and information services. So that's our world, and those are the customers we are serving. We've, in fact, come up with a mission statement to serve our customers. We say that we will enable high-tech and professional services firms reimagine trust through innovative and value solutions leveraging these emerging technologies. With that being said, I'm done with my section. Arun, you want to take over the next slide, please?
Sure. Thank you, Swapnil. And very well summarized. Delivering an engaging and fulfilling customer experience is our primary objective, as is the primary objective of any professional services organization, including, I'm sure, all of you who are listening on this webinar. This whole industry works on trust as the bedrock, but that has to be delivered, and that is what we term as engaging, fulfilling customer experience. Obviously, as we saw through the last 1 hour, trust is being achieved through the right use of technologies, modern technologies which are disrupting it. And what we are trying to do using automation, using cloud, AI, ML, and better customer experience transformation is help you deliver that value to your customers, right? And we will help you with the technology, with the adoption, with the solutions, how to navigate these changing trends, whether it's in the technology area or the trust area. We do have a hashtag Reimagine Trust, which we are supporting, sponsoring as our thought leadership around in this industry. You can follow that on LinkedIn, on Twitter, and you'll see that we have not just this event, but we have other white papers and speaker events and so on around this. As I mentioned to you in the beginning, this is a trilogy. This is the second of our Reimagine Trust white paper and webinar series. We will have one more which talks about how do you manage the trust deficits and reinforcements which come about because of the impact of technology and the changes in the trust cycle. In the meantime, if you need details from the previous one, you can reach out to us at marketing@hexaware.com. You may not be able to click the link right now. It may be static, but we'll get you the material. The webinar will be available on site through Accounting Today and through Hexaware, and we will also have a white paper in the next few days for you to download on this topic. So again, thanks for listening. We'd love to get your feedback, suggestions, and questions. Please remain engaged with us throughout the process. It doesn't have to be only during the webinar. Respond to our tweets, respond to our LinkedIn posts and our website. We'll now take your questions. We have 5 minutes remaining.
Thank you so much, Arun, and also thank you, Swapnil. We are going to get to, thank you for that slide. We are going to get to some of these questions that have come up. First up, what kind of automation possibilities exist in the trust cycle?
Yes, so I'll quickly take that. In fact, I believe Swapnil already answered it in the context of tax and audit. So I just maybe bear repetition or maybe once. We talked about how in the accounting, you can have touchless invoice processing and use automation to extract, process these invoices without human intervention. We have seen 90%, 95% automation which is happening in that. The other example was around processing of tax forms, right from entry to submission to filing. We're seeing almost 100% automation, which is being possible in the tax life cycle, especially for things which are not very complex, like let's say charitable organization tax forms, which can be easily populated through public information, and then they can be processed through the whole trust cycle process.
Thank you so much for answering that one. I do have another question from an audience member here. Do you see the different trust cycles across specific industries, like tax and audit, coming together in some form or shape?
So that's really a million-dollar question. I think that's a great question. The industry, the technology is evolving towards it, and what we will call as the platform view. The platform view means that there could be certain aspects which are reusable, whether they are for tax or audit or accounting. Let's just take the example of data input and data ingestion. Currently, the tax consultants go out and collect data in a particular manner. Similarly, the audit professionals go and do that. If the same thing can be done using a similar tool or the same tool for both functions, then we are basically moving to that reusable platform-based view. So yes, in the future, we see a lot of these components on inputs, analysis, etc., which will be done as a shared business platform across the enterprise, and hence some of these trust cycles could merge into one or maybe two, which can be reused across multiple functions.
Thank you so much for answering that. Okay, we have 1 minute remaining, so I'm going to go ahead and take one more question. Do you see specific instances of AI and machine learning in the trust cycle?
Yes, we do. In fact, we are using AI and machine learning for some of the decision making and extraction of the right terms and conditions from different documents. We recently did an exercise for a debt valuation functionality where one had to read through various kinds of debt terms and term sheets and then had to configure that to come up with a discount cash flow and the interest rate which goes with that particular debt offering. So yes, we actually use that to collect information and use AI ML. It's increasingly being used for decision making. I think Swapnil also pointed that out.
Wonderful. Okay, thank you. Thank you, Arun, for answering those questions. Thank you, everyone, for attending the session. Thank you, Swapnil, as well, for presenting. And as you can see on the slide here, if you want any more information, folks, you can reach out to marketing@hexaware.com. You can also find, if you want to connect to Arun and Swapnil directly, you can connect through me. You can find me on LinkedIn. You can email me. My email is ronica.aerosmith@sourcemedia.com. You can find me on the Accounting Today website. If you have any further questions, we can connect afterwards. Thank you once again for attending. We hope to see you in the third part of this trilogy of presentations or on another web session presented by Accounting Today. Thank you again. We'll see you next time.
Thank you. Thank you all. Thanks for attending.
Thanks, everyone.